community as well.
Great.
Okay. And we are live. All right. What's going on, everybody? Welcome to Wolf. Welcome to another podcast. I've got Juan here from BITWISE, and he's been coming on. He's coming on some spaces in the past. I'm really excited to chat with him. BITWISE Asset Management, they're a crypto-focused investment firm. They create index and thematic crypto funds, finance professionals, institutions, credit investors. They talk to everybody, and they've got a lot of stuff cooking over there inside of the world. And all I know is, dude, there's so much stuff going on in the Bitcoin world, the crypto world that people are excited about. And then the price action went up for a while, and everyone was like, this is the final time we ever hit a 5-figure Bitcoin, only for us to sort of teeter at that 105 to 110 range and then come back down. And now people are calling for 50K. Amidst the most pro-crypto presidency of all time, you got the Trump, like 2 days ago announcing we're going to do a Bitcoin miner called American Bitcoin and all this crazy stuff. And then price not following. And so people are kind of just like, okay, I need to know more. I want to talk to people and figure out what the professionals in this world are saying. And so I'm super excited to have you on, Juan. If you could, give a bit of like a quick breakdown on who you are, what you do with BITWISE, and if I missed anything on the description for you, what you guys do in the industry as well.
Yeah. Well, thanks for having me on, Cade. It's great to be talking to you. We were just connecting about you living in Puerto Rico. I actually didn't mention I'm from Colombia. I grew up in Colombia and Ecuador. So I understand the differences in like living in the U.S. versus like a more Hispanic driven country. But yeah, myself, I've been in the crypto space professionally with BITWISE since 2021. So I'm going on 4 years with BITWISE. BITWISE itself has been operating in the crypto market since 2017. So going on 8 years, managing money professionally and helping guide investors to find the opportunities and provide the opportunities to access them in crypto for nearly 8 years through bull and bear markets. Today, we manage over $10 billion, and we've grown from being just US based to now having a presence in Europe, having a presence in Australia, and starting from strictly index managed products to now a broad suite that includes on-chain products, so doing institutional staking, doing more actively managed products, and other types of solutions for investors, retail and institutional alike. We serve all audiences with a big focus on financial advisors, and we focus a lot on education through our materials, through engaging in conferences, speaking conferences, through the research we put out, and through platforms like these to have conversations, educate where we can, and that's what we do at BITWISE. As far as myself goes, I am part of the research and investments team at BITWISE, senior investment strategist there. Help produce some of the research, the thought leadership research we do. Some of the things we produce a great quarterly report that is a synthesis, very visually oriented through charts and data, synthesizing what's happened in the crypto market over the past quarter. We are actually in the midst right now of producing our Q1 report that will come out in the next week or so. So for those of you interested, keep an eye out for that. We do an annual predictions paper. This year, some of many of the predictions have already started coming true. Just yesterday, Circle made the announcement or the filing of their IPO, the registration for the IPO. One of our predictions for this year was that this year will be the year of the IPO for crypto companies, and we highlighted Circle as one of the likely candidates. So that's playing out along with other ones. We can talk about that as well. We produce an annual survey of financial advisors, gauging the temperature of advisors' attitudes toward crypto. That came out at the beginning of this year. Comes out at the beginning of every year, and it's a great benchmark to gauge how advisor attitudes on crypto market. I'm also involved with product development, product strategy at BITWISE. As I mentioned, We have a host of different types of solutions, private funds, publicly traded products, both on the crypto asset side, on the crypto equity side, on passive strategies and index strategies. Now we're putting out more products that are actively managed strategies. So working through product, and I think the Trump administration is opening up great opportunities for more products coming to market, which we can speak on as well. And then, I support our sales team meeting with clients, speaking at conferences, engaging with different types of investors to help them understand the opportunities in crypto and help them find how they can best participate in that.
Yeah, and I was going to ask, like, what do you think that is for the average person who's like, okay, I want to get into investing? Do you go the route of explaining Bitcoin? Like, I find myself I literally did it this morning on a flight back from Florida. The lady next to me just asked about what I was doing, ended up in a full Bitcoin shill on, the whole financial institutions. And I find myself doing that in a lot of Ubers. I can't help it. I just instantly, I'm like, yeah, I do content and stuff in this world. They're like, oh yeah, like the Bitcoin thing, like that's the Ponzi thing. And I'm like, no. Well, actually, hold on, give me a second here. And so I usually go the route of Bitcoin and explain that one. What do you think? Like, where's the average person's head at when they're looking at investing? Are they looking into crypto as an investment? Are they looking for a get rich quick scheme? Like, who are these people that you're mainly talking about, especially at these conferences and when you're going to speak in person?
Yeah, in person at conferences, I speak mainly to professional investors, financial advisors, endowments, family offices, those types of investors. So professional audience, institutional guided investors. Those types of investors tend to be more interested in understanding the technology and how and why it'll be disruptive, and then understanding the assets behind that technology. So understanding what makes Bitcoin unique and what makes Ethereum different from Bitcoin, and sort of understanding the digital asset ecosystem, what is what, and what the opportunities are in terms of innovation and disrupting the current system. When I do talk to retail investors, and that happens sometimes in professional settings, but then, as you mentioned, also taxi rides, Uber rides, and just on the streets in daily life. I find retail investors tend to be more motivated by just the price action, and what's the hottest, latest token. And I think actually, as we get into the conversation, I think that is those different approaches to what crypto is and what their focus and interest is, I think speaks a lot to where we are in the current moment, in terms of the disconnect, in terms of the price action, and also the disconnect I'm seeing in sentiment between retail and institutional. So I think that's an interesting contrast that we can touch on as well.
Yeah, and like the institutions we've seen the last year, I guess, or so, was that they clearly said I remember right when like the ETFs were getting launched and people were like, oh my God, meme coin ETFs are next. Oh my God, BlackRock's going to start buying into Dogecoin and Pepe, and then even these like small little micro cap altcoins. And instead, we saw a lot of inflow into the Bitcoin ETF, the largest ETF of all time. We saw tons of people getting really, really interested into Bitcoin, a little bit into Ethereum as well. But it looks like a lot of that money, that big money especially, is parked. And they're looking to hold that for a longer period of time. And a lot of traders and investors have theorized, they're like, it seems to be that this is why Bitcoin is where it's at. Because pretty much right when those were launched, we had a bit of a drop off, and then Bitcoin ran from those lower prices all the way up to now the 80s, 90s, 100K mark. And so I'm curious on your thoughts on this overall, as now we've got massive institutions buying in. We've got people like Larry Fink from BlackRock talking about Bitcoin relatively on the regular compared to past years, and a lot more bullish certainly than in the past. Obviously, now they're in the game. But a lot has changed in the last couple of years as far as the rhetoric and the way people speak about Bitcoin specifically. I'm curious if you have any like personal takes on Bitcoin, specifically as an asset, as well as just any thoughts generally from that whole move of the institutional big players moving into the ETFs, as well as just buying spot Bitcoin.
Yeah, I think Bitcoin is solidifying its mind share as a digital store of value. And as a global digital store of value asset, and perhaps an emerging reserve asset for individuals, but for governments and institutions alike, I think that view has progressed into the mainstream and has accelerated since the launch of the Bitcoin ETFs, and certainly with the help of people like Larry Fink talking about that narrative more openly and widely. I mean, over the last couple of years, we've seen many big institutional investor names on board and start speaking about the merits of crypto. Early on, it was Paul Tudor Jones, and then we've had Ray Dalio, we've had Stun Druckenmiller, and then Larry Fink obviously now has a big stake with the Bitcoin ETF and the tokenization roadmap that they're building. So I think all of that has helped the the beginning of the mainstream institutionalization of Bitcoin, and really grabbing that mind share as a digital store of value. Many people liken it to digital gold. And I do think that is ultimately the best way to view it, as a digital store of value. Now, people talk about, well, if it's a digital store of value, why is it so volatile? And of course, it's, people have to realize the characteristics of it. The cap supply and decreasing issuance is scarcity, creates scarcity value, which is conducive to a store value. But it's also an emerging asset in the world. And people forget that, for example, gold, when it went off the gold standard, when the dollar went off the gold standard, and gold was not tethered to the dollar for those first couple of decades when it started trading in the world, it was highly volatile. It had swings of 30, 40, 50% in any given year. And the volatility profile was very similar to what Bitcoin's volatility profile has been in its first decade. And then, as it became more widely adopted in the world, in institutional portfolios, in the global economy, its volatility trended downward. And even in the current, limited history short history we've had with Bitcoin, its volatility has dropped down. It used to be in the 200% per year volatility, and now we're down to 40 to 60% per year. So it's dropped over time. So I do see that institutionalization, mainstream adoption of Bitcoin happening. And that's certainly been accelerated with the launch of the Bitcoin ETFs, which have been the most successful launch in history by a long shot. I mean, in their first year, they brought in 36 billion in net inflows. The previous most successful ETF launch was the Triple Qs, and that ETF brought in 6 billion in its first year. So the Bitcoin ETFs, 6x the previous most successful ETF launch. So it's been huge, and it's been transformative.
Why do you think that is? I mean, that's such a massive landslide difference than the prior one. Like, what do you attribute it to?
Yeah, well, the first thing is that financial markets and global wealth is much bigger today than it was back when the Qs launched in the early 2000s. That's one thing. But also the pent-up demand, the pent-up institutional demand for Bitcoin was, I think, much bigger than it's been for probably any other asset or group of assets in history. What's interesting is right before the launch, we had our annual the investor survey, financial advisors that I mentioned we put out annually, and in that survey right before the launch of the ETFs, so we had taken the survey in the last months of 2023 going into 2024, and what we found from advisors is that 88, I think the stat was 88% of financial advisors wanted to invest in Bitcoin, but they were waiting for the launch of a Bitcoin ETF to invest because, as a fiduciary with compliance restrictions, with the lack of regulation, they were, largely gated by their compliance departments and their investment committees from allocating to Bitcoin on behalf of clients. But with a product wrapper like an ETF that has the SEC stamp of approval, that would clear all of those hurdles for them to be able to start allocating. And so we saw huge pent up demand from financial advisors and other institutional investors. And sure enough, when the Bitcoin ETFs launched, we saw that they exploded and gathered the assets the huge amount of assets we were just talking about.
Yeah, insane. I mean, I don't know if anyone expected that. My grandfather, big into investing, and he made some really good plays when he was in his young 20s and 30s, and did really well. He was not really much of a Bitcoin bull. I admit he still isn't. I think the biggest disconnect, even my father, he gets it. He's, like I told you before, he was big into computers, computer science, and he worked in that world. And when he was teaching, he had like multiple labs of just rows of computers. This is way back when Bitcoin was, basically worthless in terms of compared to today. And he had multiple people walk up to him saying, "Hey, like, you could be mining Bitcoin with it'd be no problem. It'd be such little impact that they would be fine if you did it, if you just asked them." And he was like, I don't know, it's just not really worth the time. I don't know, I'm not really sure about this. Ended up not rolling with it. So my dad just casually missed out on making our family generational wealth alongside all of us.
That's so funny. And there's so many stories like that of, past generations completely missing the boat. And I think it's a natural thing, every generation's like new technology is like the past generation is, more abrasive of new technologies. People, as they get older, it's harder to adopt new things. Maybe it was just that, but that's fascinating. I mean, with the grandfather having, I forget if you said grandfather, father, but being so involved in computers, which was a forward-thinking industry. Have you asked him, like, what was it that, like, people were telling him he was aware of technology trends and things? Like, what was it that made him brush it off instead of like digging into it more?
To be honest, I've asked him, and I think he's skirted around the question a couple of times. I think the real answer is financial illiteracy. I think he just didn't really understand finance that well. I mean, I didn't even know what a stock was until I was 20. I could not have explained it to you if I tried. I didn't know what investing even meant. All I knew was if you put like the Dave Ramsey method, put a few $1,000s away into a savings account over 50 years, you'll make $1 million. That was the only idea or shred of information I had for finance. He was also the same. It took him a long time before he figured out more into the investing. He started to make more money. Now he's in Silicon Valley, and he's deeper in the world now. And now I think he saw and he recognized. But I think it was honestly just like not really understanding. And at that point, I think it was so early that it was more still in the cypherpunk mode of like, dude, this is going to take over the world. And I think that's probably how he was shilled originally. Like, this will take over everything. And he was probably like, okay, baby steps. This thing's worth like 1 cent. You know what I mean?
Yeah.
And so I think that's part of it. My grandpa, he's deep. I think he's of the conversation, like more Peter Schiff. Maybe he's more into the idea. He's like, hey, let's make sure you're investing in something that's real, similar like to
tangible.
Yeah, I think he's more in that boat. But he's getting less aggressive towards calling Bitcoin stupid. And so I will say that. I don't know if it's purely because of price or if he's done the research. But I will maintain, like, if you read the Bitcoin white paper, it's really compelling. And when you realize why it was built, it's really compelling. I mean, I'm not sure of your experience when you're speaking. I mean, you mentioned you're mainly speaking with high-level investors and stuff who are interested. Do you normally lead with like the Bitcoin white paper, or is that like how you kind of approach it when you're explaining it? Do you lead more with the crypto industry and like the blockchain side of things, and you're, hey, look at the tech, or how do you usually lead those conversations?
Yeah, before I answer that, just as an aside, which is outside of the scope of this conversation, but that I really do believe in strongly, especially from what you said, is, man, in like we see technology upending education, especially higher level education, colleges and whatnot. And I definitely think one of the things that needs to be in place going forward is basic financial literacy, like personal finance in like from when you're in school, like from grade school all the way through high school. Like this should be taught as a basic thing, because it impacts, finance and investing impacts all of our livelihoods, and it's really, unfortunately, right now, the way the world works, it's really wealthy people that understand this and, pass it on to their kids, and that perpetuates that cycle of wealth. And for everyone else, all of the rest of us, like we don't learn about this till much later in our lives. And so, anyways, just an aside on that. But to your question, the way we approach, generally the way approach, or we at Bitwise approach Bitcoin and to investors or crypto to investors is not so much directly as like, look, this is the meat and potatoes of the crypto white paper or the Bitcoin white paper, and this is why it's so compelling. But we do approach it from, look, the idea behind Bitcoin, as espoused in the Bitcoin white paper, was revolutionary. Also, it didn't just happen overnight. There was like 40 years of computer programming, like computer science and distributed ledger technology and cryptography, like breakthroughs and work that had to be done for various technologies to come together to create what blockchain and crypto is today for it to work. Because people, this is one of the biggest misconceptions that I encounter, that maybe you do too, is people think it just popped out of the blue, like it popped out of left field one day. It just emerged into the world, and that's part of like the disbelief they have, is like, how can something that's supposed to be so revolutionary just come out of left field like that? And if when you walk through the history of the technologies that make up crypto, and it wasn't just individual cypherpunks and geeks working on this, but it was the NSA working on this. It was MIT. It was researchers at Stanford. It was big technical institutions, DARPA, all working on these technologies. People are like, oh wow, okay, this makes a lot more sense. Like this is, it gives them confidence and more credibility. So that's one thing. And then I think the other key thing that we found for helping people understand the technology is there's for a while, and still for today, and especially at the beginning of people learning, it's like the blockchain, but not crypto. Like, why do you need crypto for blockchain? And it's people don't really grasp that without the crypto asset to make the blockchain network work, then blockchain just ends up being another private database. And so you need the crypto asset in order to make the blockchain be decentralized and be able to have the verifiability, the lack of intermediaries, and everything that makes blockchains and crypto actually revolutionary. And once you break that down, and you explain that crypto is both a technology and a financial asset, and why they go hand in hand, that also tends to, for us, we've seen, tends to like light up light bulbs and people understanding, like, oh, okay, this is why they have to be together. This is why the combination is revolutionary.
Yeah. Wow. Yeah. Preach. That's awesome stuff. And you mentioned there with the educational side of things, I don't know in what capacity that can be, because I remember taking like marketing classes. I'm not sure what is going on with this connection today. But I remember taking a couple classes.
There you
go. In public speaking in college, and I remember thinking, man, these are the courses that probably should be more stapled in as a mandatory requirement, because there's some real things to be learned here, instead of taking like trigonometry or something when I know I'm not going to be in this world to this depth. And so, yeah, I agree. There's got to be some kind of finance or investing, and at least I think now with like Robinhood and TikTok, there are these like applications now where kids are getting more exposed to, hey, like there's a way to change your life a little bit here. There's a chance to get ahead of the game. There's educational content creators out there. Like there are lawyers on TikTok right now who are making law, seem sexy. All of a sudden, there's like TV shows that are resurfacing, and like Instagram, the TikTok and Instagram reel effect of creating these cool montage edits of everyone's favorite characters in these scenes is creating like a romantic element to it. They're like, oh, that'd be kind of cool to like work in a hospital or work as a lawyer, or go, have aspirations to maybe join the company like Bitwise, because I saw one of my favorite creators is now creating content, or Grayscale or whoever. And I like that aspect of it. I think that's, the more of that, the better. So I want to talk a little bit about like the digital products you guys have to offer, and also your thoughts on the market as a whole. So like, I guess looking ahead, what aspects of the crypto industry or sectors of the industry are most exciting to you? I know people have thrown words like real world assets, the tokenization of the world. There's the people in the deep pins corner. There are the gamers out there saying blockchain gaming is going to be massive. Of course, AI, bunch of sectors out there. Are there any that you guys have looked at, or you personally have looked at, where you're like, that's the one I've been paying attention to the most?
Yeah, for sure. I think there is incredible momentum building in the industry right now. And just as a step back before we get into that, I think what goes into that is that there's a and we were mentioned it earlier, but there's a huge we've seen at Bitwise a big disconnect between retail sentiment and perception of what's going on in crypto right now versus institutional. And we think we see a huge disconnect on it. So, retail is very disenchanted because of the price action. And if you look at crypto Twitter right now, there's only doldrums. Whereas when we talk to all the majority of the institutional investors, we talk to the financial advisors, we talk to, they are all really excited by what's going on in crypto. Sure, they also dislike the price action, but they're seeing it much more as a opportunity to buy the dip or to establish a first allocation, because they recognize, and I think this is the difference between retail short-term focused trading action versus professional investor long-term focus. We look at fundamentals and understanding that those things can take time to play out, and that markets in the short term can do anything, but it's about looking at the long-term picture. And when we look at the price action that we're in today, I think some of it is due to the initial pump and euphoria from the Trump administration coming into winning the election, and the promises to crypto and embracing the industry and all that implies. We saw, and people forget that we're down, Bitcoin's down 12-15% year to date, but it's still up like 25% from when Trump got elected. So again, myopic price action, but we're still up. So I think some of it is that initial euphoria from the Trump election dissipating a bit, because now that he's in power and he has kept many of the promises, he's enacted the various executive orders. The SEC has walked back the majority of the lawsuits against crypto companies, and all that is great. But now that we had that reset and we're starting to build on these executive orders and whatnot, it's going to take some time for those things to come into effect and build. Example, digital asset executive order enacted, right at the beginning of his presidency, but that set out a 6-month timeline for the task force to evaluate what's going on in the industry, gather input from stakeholders, and then recommend actions and to actually implement. And so, that's going to be 6 months before we see any tangible progress. And I think, investors, and especially retail investors, expected like on day one or within like the first month or even 100 days of the Trump presidency, like everything was going to happen all at once, and we would see the effects immediately. So I think there's part of that disenchantment and mismatch of expectations to reality happening. There's, especially on the retail side, there's the meme coin casino that is folding. Retail investors all up on meme coins over the last year. We saw that huge action lifting the market. Part of the rise, or the majority of the rise of Solana last year. And then this year, we come into the year and we've had some really big duds on meme coins: the Trump Melania coin debacle, the Libra debacle. And I think all of that, and I think all of that is really, I think it's starting to sink in to people that meme coins are a casino, and that you can't get rich quick, and that you have, and people have to, I think, and are starting to differentiate the crypto space from like meme coins, which are just gambling, and then the coins with fundamentals behind them. So I think that meme coin euphoria of the meme coin casino is folding, and has affected the price action. There was also, going into the second half of last year, and right into the beginning of this year, there was also a lot of euphoria behind AI coins. And with the rise of Nvidia last year to becoming the most valuable company in the world, people realizing the opportunity of the synergies with crypto, so that drove AI coins, but the crypto market as well. And then this year we've seen the drama with DeepSeek, and I think again, initial pump and euphoria on AI dissipating, and the mismatch that also that is going to take longer to actually set in and start working tangible effects. And then you can't ignore the macro, right? It's just like markets outside of crypto are down this year as well, because investors are worried about how the tariffs are going to play out, how the tariff negotiations are going to play out, how that's going to affect the economy and inflation and interest rates. And so investor sentiment is down. And as a, that affects all risk assets, including crypto. So there's that as well.
Yeah, definitely. A bunch of great points there. You brought me back. I literally forgot the Trump and Melania token fiasco at the beginning. That was just a few months ago too, which is pretty crazy because so much has happened. That feels like a million miles away.
Right? Oh my gosh.
What I mean, were people on like Wall Street talk? Like, was this like a topic of conversation? Were people like blown away? I guess for me, we were kind of like shocked, but then we were kind of like, it's normal, I guess. But then it's like the rest of the world who are not deeply in these trenches like some of us are. That must have been just bizarre to watch, right?
Yeah, totally. It's like, and that's the thing about crypto. There's so much that happens and so many things that are, because of the innovation, there's so many things that are outrageous, or that like, and things move so fast that even us in the industry don't, I think, have the time to fully take them in, fully like think about the repercussions before we're like throwing the next thing in our face. And it's like, okay, well, forget about that, but there's this. And I think that helps compound the problems in crypto about like how volatile the asset class is, because it's hard for people to make up their mind. Like, are things good right now? Are things bad right now? I hear great news today and terrible news tomorrow. It's hard to keep up. I mean, in terms of the Trump Melania coin, that was something that I think when we talked, when it happened and it started hitting, the mainstream news, for institutional and professional investors, I think it sent a little bit of like FTX PTSD vibes down the pike. People were like, "Oh, you've been telling us that FTX, was scandals like FTX and fraud like that was behind us, and look at this! It's now the president, like, launching a coin that just tanked, and not only the U.S. but in Argentina, and like, I mean, have the problems only gotten bigger? It was before it was FTX, which was a private company, but now we're seeing like leaders from countries like get involved. It's so I think it surely wasn't good, a good look for the industry. So
do you think like a lot of people have said the cycle is different, that this period of time is different with all the technological advancements. Now, I remember the first time I read through the Bible, I was like, dude, this is the same story over and over and over and over and over again. It's humanity getting cocky, thinking they're all good, then everything falls apart, and then they restart. And it's like literally the same story a million times in a row. And sometimes I think about that with the markets. And I'm like, I feel like there are new lessons, new things that happen, but ultimately it's like the same thing over and over again. But this time it feels like there might be new characters and players introduced to the game, where I'm not sure if that statement still holds. People are calling into question the 4-year cycle now. They're thinking that maybe Bitcoin's going to track with the stock market. And a lot of people are saying everything has changed because of institutional money and because of AI and all these buzzwords and stuff. I'm curious from your perspective where you sit with all that.
Yeah, that's a great question. And I think as a meta thought of what you put together there, markets are age-old recycling machines of the same patterns, just with different assets, different market dynamics of the time in history. But I do think on like the long-term scale, this is different in the sense that this is a new disruptive technology that I think is here to stay. So it's not a fad. I think people are realizing that now, and the long-term implications for reshaping the global monetary system, the global financial system through this technology, I think we're realizing more and more that that's what's happening, and that's what's going to continue to happen. And so that cycle of innovation as a transformative technology, akin to the early internet and the .com era, and the huge winners that came out of that, I think we are living through something similar in that sense, and that's hugely transformative. Now, in terms of like the shorter term cycles of the 4-year cycle that we've been living in, or that we've been seeing in crypto since the beginning, which would mean that this year would be the last year in the most recent cycle. And whether it's going to be different this time or not, we will see. I think there is a chance that it could be, just because if you look at the market dynamics, last year, great year for crypto, and then had we continue to just go straight up this year into the beginning of this year, and like the sentiment and the euphoria just continued building, I think that would have been a clear indicator that, usually what happens in crypto is once people get too excited, it starts compounding and the price action starts telling you that and showing you that. But with the change in administration and the market dynamics that Trump has created with the tariffs, and then, the idiosyncratic blowups like the meme coin blowups that we've been talking about, that has taken some of the air out of the bubble, or not bubble, but out of the market action. And so we're seeing a reset coming into this first quarter of the year that I think sets us up, if with that reset, if we see the regulatory clarity and actual regulatory things being passed into law, that will drive innovation or unlock innovation, and then some of those things start to build. That is a longer term build that I think can put us past this year into next year, break that 4-year cycle in terms of the bull market in crypto extending. So I think there's a real chance at that. Who knows? Then again, we might have had this reset, and then the rest of this year, or at some point in this year, things because crypto is also coiled spring and very volatile, so maybe we shoot straight back up, and then that compounds just into skyrocketing to unsustainable levels. So hard to say, but I do think there's a fundamental case for why it could be different in this cycle.
Wow, very cool, very cool. Yeah, I agree with you. I think there's so many different factors this time around. It would be shocking because everyone who's been in crypto would have to now recalibrate, and now it'd be kind of exciting because now it's a level playing field. Now everyone's strategy called into question. Now nobody knows who's trustworthy about who can really think on their feet. That'll be pretty exciting. So I want to poke in on this as well. So with what BITWISE is offering and the products you guys have to offer, for people who are, some people are hitting you guys up, being like, yo, you guys should put these out. You guys also are having internal meetings. You guys are like, no, these are things we need to push out. What are you guys paying attention to? Is there any products you guys can that you're able to talk about that you're either excited about, have coming on the horizon, or you guys have currently that people love that you wanted to dive a little bit into?
Yeah, sure. We can do an overview of that. Our flagship fund, which I think is still a great fund for exposure, is our BITWISE 10. So the 10 largest assets by market cap, but they're not the same 10 as you'll see if you look at the top 10 by market cap on CoinMarketCap, for example, because we run a series of screens that are everything from liquidity to regulatory and legal risk, to tokenomics and decentralization. So we run a series of risk-based and due diligence screens that screen out things, and so you end up with a modified top 10 that are really the top 10 legitimate assets that pass all of those screens. And I think that index approach, which is our flagship, is a great way for investors to get diversified exposure into the industry. As we've seen with indexing, the reason it works is because a properly constructed index approach captures the winners over time and allocates more weight over time to the winners. So it's a way to participate in a rising tide without having to pick winners and losers, which is generally a fool's game for most everyone, including professional investors. So I think that's a great approach, and we offer a fund for that. And then but we have other things now. We have the Bitcoin and Ethereum ETFs, spot ETFs for people who want direct access just to Bitcoin, just to Ethereum, low cost in an ETF format. That's been huge for us and huge for the industry. We have our flagship crypto equities index approach, which is a basket of pure play crypto equities for many investors who are still, and this we see still quite a bit with professional investors, is many, because compliance departments and because traditional institutions, especially large ones, move slowly on changing their guidelines and changing compliance and approvals. There are many professional investors who, even now with the ETFs, still are not able to invest in them because they're, a nascent asset class, because there's still, regulatory uh, 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 uncertainty that that their compliance departments are worried about. But they're allowed to invest in equities, and so publicly traded equities that are in crypto is a way that they can invest in. They can look at the balance sheet, cash flow, financial statements, and run traditional financial models on them to value them. So that's another thing that we have out there that is great for investors. Just recently, we launched an equity ETF that is an index of Bitcoin treasury companies, so publicly traded companies that are adopting Bitcoin as a treasury asset.
How has that one been adopted?
It's great. We've had a great reception on it. People are really excited about it. Obviously, we've seen MicroStrategy hugely successful, and the standard bearer of that approach. And then we've seen many other companies start adopting that Bitcoin standard playbook, treasury asset playbook, that has been hugely successful in terms of stock performance for companies adopting it, and also capital raising for companies. So that's a growing trend that we see is a corporate adoption of Bitcoin as a treasury management asset. And there's also, I think another important thing to note for investors is there's also been a big switch that happened this year that also facilitates corporations buying and holding Bitcoin, which is prior to the beginning of this year, the FASB accounting rules made it so that if you bought Bitcoin as a company, you bought it at whatever cost, and then if Bitcoin, the price of Bitcoin dropped, you had to write down your investment. But then if the price of Bitcoin went back up, you couldn't revalue it, you can fair value it up. This year, beginning of this year, that accounting rule changed, and now you can fair value it up and down, which means you can, for the first time, start recognizing gains when they happen. And so I think that makes it huge. That gives huge impetus and flexibility for companies to adopt it, and we're seeing that play out with more. And I'm sure you're seeing this as well. Every day, it seems like a new company announces a strategy to incorporate Bitcoin into their treasury. So we think that's an emerging trend, and we have a product out there for that. That's had great reception, and we're starting to build out more actively managed products. I think the turnaround in the SEC this year is really opening up the ground for more products to come to market. We've seen filings from many issuers, including ourselves, that are being worked through right now. Some new products that have already come to market by many, including us, and others that might be coming in the future. And I think that's great because it'll open up the landscape to give investors more access through low-cost vehicles, ETF vehicles, which is a preferred way of investing for investors. And that'll open up access, and it'll also, as we're seeing with ourselves and others, it's opening up new differentiated strategies to gain different types of exposure to the market. As we started, it was long-only exposure, but now there's strategies that are coming out that give you, target return exposure, or buffered exposure, long-short exposure, covered call strategies, mixing equities and crypto assets in a fund. So and then traditional assets in crypto. So I think there's just a diversity of exposures that will suit different investors and their risk tolerance and their objectives. And I think just providing more options for investors is really positive for the market and for investor outcomes.
Yeah, and that is exactly probably the arguments I will use for my grandfather. I'm like, hey, there are ways to get into this game that don't involve the big scary stuff like getting your own wallet and opening a new account and all this stuff. By companies that you've trusted, been here for a long time, they've got plenty of options. They're not just degen meme coin ETFs or something like that. They've got plenty of high-level options that big companies are entering. I mean, GameStop most recently announced that they're going to be adopting a lot more Bitcoin into their HODL. They're raising money for it, and MetaPlanet and a few others who are doing this. I know some people are nervous because think people are nervous because if you're a trader versus an investor, and depending on your time horizon as well, some of the traders are nervous. They're like, hey, if you keep buying Bitcoin at these levels, we crash down to 40K, you're not down underwater on your investment. Are your investors cool with that? Can they ride that wave along with you? Do they have the same conviction in Bitcoin that maybe Michael Saylor has? And that's going to be an interesting question for sure. But I do think that trend will more than likely follow. And, if it's any indication, Bitcoin's price the last 20 years, it's been a pretty good vehicle to be on when you compare it to just about anything else. I saw a crazy chart yesterday, and it was if you had invested in 2009 $1 into silver versus $1 into Bitcoin, I think it was $88 million or something ridiculous like that, and it was like $8 or $80 in silver or something. Which
Holy cow!
But that picture blew my mind. I mean, Bitcoin's been on an absolute tear the last few years. I can't even imagine for people who got in that early. I don't know what their mindset was when they first got in. Were they like, oh, this could definitely have, aspirations of $100,000, $1 million, or if they were like, if we hit $2,000, we'll be happy, kind of thing.
Yeah, that's a crazy disparity, and I think it's really very few investors who got in that early who have held the entire way. I think, as we know, talking to people in the space, many people have round tripped their investment, have gotten in, made money at certain points, lost money at certain points. Like very few, like the HODL acronym, very few have actually done that through the years, and especially since the beginning. The few that have, I mean, however much they put in, even if it was $1, they made a killing, and kudos to them for being able to hold through what has been the most volatile asset in the world. But even with that, I think you make a great point with the comparison to silver. And there's another great website out there that compares the value of things like the average price of a house over the years, price in Bitcoin versus price in dollars versus price in gold versus price in other things. And I think comparisons like that, like what you made and things like this, really show you really make the case for Bitcoin as a long-term store of value. Because again, Bitcoin is an emerging technology. An asset can be volatile on the day-to-day as it's getting adopted. But if you look at it over time, which is what a store of value is supposed to do, it's like it's not the day-to-day, but it's over a period of time. Has it protected your wealth? Has it preserved it? In Bitcoin's case, it's actually increased your wealth compared to everything else. So it's worked as a true store of value asset, and I think people are realizing that more and more, and I think that helps them stomach the volatility, because they, as you understand the fundamentals, there's limited supply, there's decreased issuance, there is growing adoption from multiple different types of investors. We're seeing, we think our long-term view looking out this year and going forward is that there's a structural imbalance between demand and supply for Bitcoin that that we think that's going to continue over the next couple of years, where there's going to be more inflows coming in from the Bitcoin ETFs. For example, we've had a lot of institutional investors on board, but the big wirehouses, most of them have not approved Bitcoin on their platforms yet. The Wells Fargos of the world, the Morgan Stanley's opening it up to the entire platform. So, and those institutions manage trillions of dollars of wealth. So as those wirehouses on a platform unlocks happen, we'll see huge inflows and continued influence into the Bitcoin ETFs. The corporations we talked about, the FASB rule change, plus the Bitcoin standard playbook, helping companies raise capital effectively and helping stock performance. So more companies are going to continue doing that. We see governments onboarding. We already see that there's 10 plus governments around the world that own Bitcoin, whether it's through seizures, mining, or buying it themselves. And with the Bitcoin Strategic Reserve now have been approved in the US, we believe that sets in motion a game theory domino effect that'll prompt other governments to buy Bitcoin as well. So we see governments buying Bitcoin as well. So those things are creating a structural demand that is strong, that is bigger than this limited supply that we have. And so, for example, currently, as of the last Bitcoin halving, the current annual supply, new supply of Bitcoin is 164,000 Bitcoin being produced every year, and we see for 2025 potentially 500,000 to a million plus Bitcoin in demand from these different sources, Bitcoin ETFs, corporations, governments that I just mentioned. So big demand imbalance that generally works over time one way for the price. So I think we'll clear this sideways and downward choppy market stemming from macro. Eventually that'll correct itself. And then I think as we see legislation and regulatory clarity emerge, as we see some of these other use cases in crypto start to emerge, tokenization, AI, et cetera, I think all of that will play in favor of with the added demand to help prop crypto prices to continue to move upward.
Yeah, and one of the greatest arguments I've heard for Bitcoin, because at 26 now, I think been able to finally move out of that month-to-month mentality of let me make it to next month. Rent is the only thing on my mind, and versus now I'm like, okay, now I'm looking at investing long term. And you look at the options across the board. A lot, especially like the tech companies, they're not that old. They're only 20, 30 years old.
Right.
And you're like, okay, and a lot of them depend on a big figurehead. You got the Mark Zuckerbergs, the Elon Musk. So you're like, okay, what happens when they're dead? Like, will they be able to fill the new shoes? Will their companies start to fade? Will it become a Yahoo type of situation where they kind of just fade into obscurity? And with Bitcoin, it's timeless. It's like as long as electricity exists, we'll be good. And like you said, finite supply. There's not an exact, I mean, there's a guy or a group of people, Satoshi, but they've released it into the world. They let the free market decide, and it has decided. And now institutions are here, governments are here, like you said. It's pretty fascinating because you're like, okay, what could I pass down to my kids? You're like, your Tesla stock? Like, probably, maybe. Who knows? The dollar is also going down, so you might be up 20x, and the dollar might be down 5x. And now it's like, where are you at? Versus storing your money in these Satoshis. And for me, that's been a big realization that's still taking time for my head to wrap around, because I don't have that experience of the decades of experience investing into long-term assets. I know people who have held stocks longer than I've been alive, and I'm just like, man, like that's a different mentality to adopt. But that was definitely one of the greatest arguments I've heard for Bitcoin. And it's definitely a really cool asset. Definitely one that I think is special and unique. I want to switch lanes real quick, and we got a few minutes left here. Tap into a little bit on yourself and how you ended up getting to BITWISE, how you ended up landing an opportunity like that and working at a company like this, your experience working here in this industry, how long you've been doing it, a couple of things like that. I would love for you to share.
Yeah, by the way, that's such a great point about the long-term investing and Bitcoin and crypto not having centralized figures that you live or die on by the sword. That's such a great point for adopting a long-term mindset about why this asset is why Bitcoin and crypto are important and have longevity power. But yeah, about myself, I started my career working at a cloud computing company, and I was doing FP&A there. And that helped me learn about corporate finance. It was interesting. This was Rackspace, public cloud computing company at the time. It helped me understand the internal plans a company makes versus how they're communicated to Wall Street, which is really interesting now when I'm listening to investor calls or investors talk about the plans for their company or whatever. I can pick apart some nuances that I learned from that. Was involved in some of the M&A the company did at the time. Really opened up my eyes to the challenges with the supposed synergies that all M&A creates, and I think it's more few and far between that where synergies actually play out as expected. But at that time, I started doing the CFA program. Was getting more interested in investing as opposed to corporate finance. So started doing the CFA program, then moved to an investment firm where I started as an analyst and rose up to be a portfolio manager. And what was a great experience there is I ended up managing both equities funds and largely technology growth funds, but also fixed income funds. And that really taught me a holistic approach to company capital structures and but also to understanding the complete picture of macro and how it works. Equity analysts tend to focus more exclusively on the business cycle. Fixed income investors tend to focus more on fiscal debt side of things. But when you put it together, it really gives you a more comprehensive understanding. And I think that was really helpful for me coming up. And then I also and then a lot of what I did there was create quantitative investment strategies, so factor-based strategies for the funds. And help design and launch. This was at US Global Investors, JETS, which is I think still the only airline-based ETF. And we launched it, and I managed it when it went from, it was crazy. Up until the pandemic, the fund had been out for a couple of years, had about 150 million in assets. But then when the reopening trade started happening and things started opening up and people started traveling, like the airlines went gangbusters, and that fund went from 150 million to like over 4 billion in assets. And managing that fund through that period was a huge, like, amazing experience and hugely challenging experience as well, with assets coming in that fund that fast. But it was an incredible experience. And then at that firm, we also got put in touch with some of the early Bitcoin miners in Canada, and helped in the process of taking what is now Hive blockchain public. So help with that, and that's kind of when I learned a lot more. I'd been sort of dabbling in crypto up until then on my own, but through that experience, really learned a lot more. Really opened my eyes to the opportunity in crypto as a paradigm shift and change in disruptive technology and finance, and that's what prompted me to really want to get involved full-time professionally in crypto. That's started looking for opportunities, and found the connection with BITWISE, who was doing index funds for crypto, and I had designed the ETFs, which have an index approach at my prior company. So found the synergy there and jumped on BITWISE, and then the rest is history.
Wow, what a crazy story, especially for two things. I mean, I had no idea you were involved in the early stages of Hive. That's really cool. Love the guys over there at Hive, and very cool about the airlines.
Yeah, great.
Being just a casual like $1 billion X over there to go from 150 million to 4 billion. That's crazy. How was that?
It was insane.
How did you even manage that?
It was crazy. We had to through that period, we had to revise the investment strategy for the JETS ETF. So the way we constructed the tiers for the companies, the liquidity triggers started breaking on the ETF model, and on the liquidity that we could put into the different tiers of companies before it broke the structure of the fund. And so we had to amend that, expand the list, the number of companies, widen the liquidity bands, just to be able to successfully take in the money without having the ETF break. It was pretty gangbusters and a pretty crazy experience.
Wow, that is wild. Wow, crazy. I probably have like a million more questions there, but I know we gotta wrap up here in a second. This will be like my final thing here. Any like big lessons you've taken or bits of advice you have for people who are trying to follow in your footsteps a little bit, break into this world? Do they need to follow a certain strategy? Is there a sort of laid out thing they can follow, or is it kind of you take opportunities, you say yes, you try it out here? Like, what is the process? Do you have any advice?
Yeah, that's a great question. As an investor looking to invest in crypto assets, I would say definitely think long term, do the work to understand what crypto is. There's many people. You guys are doing a great job at educating people. We put a lot of effort into educating people. So find the companies that have high quality educational materials and really get educated before you start investing, and then really look at things for the fundamentals and not the short-term price action, and have a longer-term view. Think of it as a multi-year or multi-decade investment as much as you can. And then for people wanting to jump into this space to work and professionally, as you know, and as this as our collaboration emerged, I love that about the industry. People are so collaborative. They really want to build together. They are down to help out. So jump in the fray and don't be afraid to reach out. A lot of crypto moves through crypto Twitter, so jump on Twitter, and then ask for opportunities, see what's out there, and do take like opportunities, and try things out. And the space is growing fast, so there's a lot of opportunity happen. And if you want to jump in, I think you can find a way to do it. Just reach out to people, be friendly, be willing to put in the work, and collaborate, and have put forth good ideas. And I think you can do it.
Let's go. Let's go. I love it. That's fantastic. Well, listen, Juan, it's been amazing having you on. I'm glad we got to chat, really dive deep into the markets with you, get some background on you and everything that BITWISE is doing as well. I appreciate you coming on, and I highly recommend anyone who's been watching this, give him a follow. If you're on X, just right above our faces, you can click his handle, as well as the BITWISE accounts. If you're down on YouTube, you can go down below in the description. Juan, is there any final thoughts, shout outs, anything you want to leave the audience with before we wrap?
Shout out to you and the Wolf Crypto team. You guys are doing an amazing job. Thanks again for bringing me on. This was super enjoyable, and we should do it again.
Definitely. I'd love to have you back on. Listen, guys, I appreciate everyone who came through as well. Thank you all for watching, and definitely like and repost the stream if you enjoyed it. We'll have a bunch more content coming out. Hopefully we'll get back on, and we'll catch you guys all in the next one. Take care. In 3.